Hello, everyone. Welcome back to Growth Beyond Your Self Limits. Here we talk about elevating yourself financially, physically, spiritually, emotionally, and everything in between. So, today we're going to be talking about 5 ways to improve your finances. Now, some of these things may seem like typical run of the mill things, but maybe you're looking for something new or no one's ever taught you about the basics on what you could do to improve your finances. And when I talk to you guys, I'm going to talk about some items that seem very straightforward, things we never learned without experience, things your parents may not have taught you or should have, or the school system kind of forgot to mention. And we're going to break that down in this video as well as in all of the videos that I share with you guys on my channel. So, number one, know what your absolute bills are. So that's things like rent, water, utilities, your car note if you have to get to work, your Metro Pass if you take public transportation, your daycare if you have kids, nannies, food, things like that. So those are your absolute bills. And now there are going to be outliers to that, but these aren't absolute, okay? So that's things such as going to the movies or eating out or subscriptions that you have that do not include internet. So you want to know what your absolute bills are, and then you want to take one thing that you need to make you feel like you can survive, like you're doing good. So that could be a cup of coffee that you like to buy or coffee you like to brew at home. It could be treating yourself once or twice a month to eating out. It could be getting your nails done maybe once a month, just depending. So it really depends on what your financial situation looks like. But the whole idea of this is that you want to improve your finances. That means you're not going to do everything that you're doing right now, and you kind of want to see, where can you find room to live, but also what those absolute things are. So make sure you have an idea of what that one item is that you absolutely need to feel like you're not just surviving, but living your life. And then later on, you can go back to it and then kind of cut that amount if you need to, because where you currently are isn't making sense. So that's number one. Number two, know what debt you have. And so this could be medical debt, credit card debt, an auto loan, your mortgage, if you do have a mortgage, but then again, that would be included in your absolute bills. So we don't really like to count things that are daily necessities, such as rent, as a debt. However, your car note will be included. Anything like Klarna, it's a payment app where you can pay monthly on it. Any subscriptions that you have signed up for, any personal loans that you may have gone into default for, you want to know what that debt is, and you also want to know what the interest rate is. So what you're going to do is you are going to gather all of that. So let's say you have a lot of credit card debt. What you can do is see if you have the lowest interest rate. And if you don't, look for another card that does. And if you have high balances and maybe you do have the lowest interest rate, but you just can't seem to catch up, but you knew that if you weren't paying $100 in interest a month or $50 in interest a month, you could probably pay off these cards this year. Or maybe your balance isn't even that high, but for you it feels never ending, like your card is maxed out, you pay the minimum balance, you pay a little bit more than the minimum balance, and then the interest rate hits you, all that interest that you've accumulated over time, which is either double or equivalent to the payment that you've made, or damn near close, right? So what you want to look for are cards with a lower interest rate, or cards that offer debt consolidation or rollovers. And specifically, if you can't get a lower interest rate, what you want to do is see if you can get a card with a higher balance, or even just roll over one that's going to offer you 0% interest for 12 months. So not that year, but 12 months. A lot of credit cards offer this because they want to get your business and they're anticipating that you're not going to pay it off, unfortunately. And so you can do this with a couple of cards if you need to. So let's say you have one or two cards that have a high interest rate, you apply for another card, you get approved. Even if the interest rate's higher, then I would still roll that over so that you can take the benefit of those 12 months to get caught up and not pay interest. So the next thing is you want to build your credit, whether you have good credit or you have credit that needs to be fixed. So first, let's say you don't have any credit. So how are you going to build it? The first thing is to get a secured credit card. And that means going to a bank. You can do something online, preferably credit unions, because they offer better rates and they have loyalty programs. And so what you would do is you would take $300, $200, or $500, depending on the credit card. And sometimes if you have no credit, or even if you have bad credit, you can still get a secured credit card. The only difference is whether or not there's going to be an annual fee or not. And generally, when you go to a credit union, there is no annual fee for their secured credit cards, because with a secured credit card, it's like a savings account. You are spending your own money. So if it's $200, you go to the bank, you go to the credit union, you give them $200, and every time you spend it, you're expected to pay it back. And the reason they give it to you is because it's guaranteed they're going to get their money. So if for some reason you're unable to pay it, you already have that $200 sitting there, and they'll be able to get it back. And if anything, they're getting interest on it as well when you do make those payments. And another thing I want to mention is when you start out, this is your first credit card, you do not need to have a balance for it to show that you have a good credit history. As long as you're paying it on the due date, as soon as it comes in, and if you pay it within the 30 days, so as soon as you get that bill, you're not going to accrue interest, and you're still going to build your credit, and you're going to show lenders that you pay on time every time, that you have, $200 available to you, but you always have, the $200 amount. Or if you leave a balance, make sure it's under 30%, because they're always looking at your utilization rate. And that means how much you're using per month, or what you have left over consecutively every single month. So if your credit card is $100 and you have a balance of $30, then that's fine. That's going to say that your utilization rate's at 30. They'll probably recommend you go to like $29 or $28 for the balance. But if you can keep it at $10 or $0, that will look even better on your credit. And after about 6 months to a year, you should be able to apply for a regular credit card. Or if it is a credit union, after 6 months to a year, they will offer you a normal credit card where you can either get rid of that secured credit card or transfer it over, get your money back into a regular credit card where they're not holding your funds anymore. But I do recommend that you keep that one if possible, if you're just building your credit, because that's going to create the longevity of your credit history. So number 4 is you're going to have to take a hard look at your spending habits. So if you have a bank account, you're probably going to want to grab a drink for this, or even some coffee, whatever your preference is, or a snack, and you're just going to have to go through your statements for the past 3 to 6 months to really see where your money is going. Because if you have all your absolute bills and you add that up, and you say that after you get paid, you should have $600 and you don't have it, you don't have anything in your savings, or you only have $200 left at the end of the day, there could be so many things in there. So it could be that you're eating out all the time, you're hanging out with friends, or maybe you signed up for subscriptions that you don't even remember that are coming out. Maybe you have a gym membership, maybe you have a makeup subscription from years ago, and maybe they only charge you once a year, or maybe they charge you every 6 months and it's only $3, $5, $10. But at the end of the day, all of that adds up to what you could be saving or using towards something else. So sometimes it's a very hard pill to swallow. And so I recommend when you get ready to do this, you have a drink ready, some coffee, some tea, you're listening to your favorite music, so you can really get into the zone and take the time to look at where your money is going. Now, finally, the last thing I'm going to talk about is something that you hear from everyone when we talk about ways to improve your finances, and that is making a budget, right? So we can know where our money is going, we can know what debt we have, we can know how to build our credit, but if we don't have a plan in place, we're not going to get anywhere, right? What is measured is how you build success. That's how you move forward. If it's not measured and it's not tracked, then anything could be happening. So just like multiple things could be coming out of your account, there is no possible way for you to reach your goals and truly save or get to the next place in your life if you don't have a plan. And a budget is a plan. It's going to include all of the hard work that you did right before this final step, and it's going to set you up on the right track. This way you can make sure that you still feel like you're living, you're still giving stuff to yourself, you can plan for events and things you want to do, but you're going to have to put it there. So you need to know how much money you're going to spend, how much money you have, how much you're going to treat yourself on, and how you're going to get to the goals that you want and that you need. So if today's tips helped you or you enjoy this type of content, please like this video and subscribe. And if you would like a part 2 to this video, please drop that below in the comments. Otherwise, I will see you next week.